Hi, welcome to Bond Bytes, the daily bond market highlights from INR bonds. I'm Arjun Patsati, and the rupee has fallen to rupees 82 per dollar. And RBI is desperately trying to support the rupee by selling dollars, and they've already depleted the FX reserves, which is down sharply. And this fall in FX reserves is hurting the rupee further by reducing the import cover available. So average imports for the last 6 months was around over $60 billion. And at its peak, India had about 10, 11 months of imports. And now it's come down to just about less than 10 months of imports, maybe. Yeah. So just around 9 months of imports, I could say that. And it's getting, if RBI sells further US dollars and depletes foreign exchange reserves, it'll get even less. And this will this will keep the rupee down. But even more important, the rupee is falling because huge amount of short selling is happening in the currency markets. Currency traders are borrowing low at cheap RBI rates. RBI has not hiked rates enough, while the Fed has hiked rates very sharply. And with cheap RBI money, the differential between the RBI and the Fed funds rate from 4% levels is just down to less than 2% levels. And if this continues, currency short sellers will make a lot of money by selling the INR against the dollar. And what they do is they borrow cheap at around overnight rates are around 5.2, 5.3%. They borrow cheap, and even if they pay a slightly higher cost, say 6%, they go and sell the dollar. They go and sell the rupee, and when they sell the rupee, they buy the dollar, and they keep the dollar in the US dollar deposits. And as the rupee depreciates, they earn a huge amount of money on the leverage short selling trade. And this will further fuel further short selling and take the rupee down. And if the rupee goes down, and if RBI tries to sell more dollars, then the import cover will go down. All external ratios will look poor. Then there will be capital outflows, and the rupee will go down further. So the only solution for the RBI is to hike short-term rates very sharply. And in 2013, in one day, RBI hiked the overnight borrowing rate to 3%. They made the liquidity very tight and made borrowing costs very high, so that it was very difficult for currency traders to borrow and sell short. So will RBI follow suit on Friday? We need to see. But selling dollars is definitely not the right move by RBI, whereas it weakens external debt ratios. And with trade deficit at so high levels and imports rising, and all this is now will hurt the amount of money India has for import cover, and this is not a good sign at all. If you want to know what are the impact of the RBI policy on Friday, we are having a webinar at 3 p.m. where I'll discuss the RBI policy, global central bank rates, and all its effects, and how everything is interlinked, and how all this affects your fixed income investments, and you will understand where to invest best in fixed income if you're a fixed income investors. And do register for the webinar. It's Friday, 30th September, 3 p.m. The registration link is in the description below. If you're a financial advisor, obviously the best place for you is INR Bonds Partner to understand the best impact of all this volatility on your clients' fixed income portfolios and overall investment portfolios as well, and find the best investment solutions through our bond platform, where we give you the best bonds available with our own proprietary analytics, which takes into account all this kind of volatility and gives you the best bonds for your investment for your clients. Log into INR Bonds and take our partner portal right now.
As a financial advisor, my biggest responsibility is to help my clients make the right investment choices. Now, with INR bonds, Buying and investing in bonds for my clients is quick and easy. With my guidance on bonds, my clients are happy and I'm getting new business every day. Register as a financial advisor on inrbonds.com to help your clients invest and save better through bonds.
Another bond Bytes highlights, the Sensex and Nifty came down. The 5-year gsec yield is trending above the 10-year gsec yield, reflecting that the cost of money will rise. And the US 10-year touched 4% before coming down. And everything looks negative in the global bond and currency markets. Do not forget to download our app, Quick Invest by INR Bonds, for the best curated list of bonds on offer, the most information, transparency, and the best in-app investment process. Download the app now, iOS and Android.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
And if you're not subscribed to our YouTube channel, to listen to Bond Bytes and search for yields and our podcast, do subscribe now.